learned in the previous lecture in the first class. Okay, you see, this is your course, Engineering Economy, and in the first lecture we have 14 slides. In the class 1 I did some 6 slides. Slide 3 to 6 is all about introduction. We did it in the last lecture, but again I will give you an introduction about that for absentees. I will not repeat this again. So you see, I just want to tell you what is economy in short, okay? Because the students who were present with me in the last class, they will feel bored when I repeat this again. Yeah, you just follow the slides and the material is there in your lecture. You go to your announcement and click lecture, you will get this PPT. So you see, I'll just give you a small introduction about this economy. Economy is nothing but it is the production and distribution of goods and services. See, it is a production and distribution of goods and services in a particular geographic region with proper and effective utilization of available resources. The major concern of economy is how best we can use the resources effectively so that we can make the necessary production and we can distribute to the society. This is for the development of national growth. Okay, and I was teaching about what is command economy. It is done, total economy is controlled by the government. What is market economy? The economy is around 70% is controlled by the market people, but still government is intervening them to avoid monopoly. And I told what is knowledge economy. It's creating the knowledge, and I told what is engineering economy. Engineering economy is based on creating, evaluating, and trading engineering activities and engineering products, engineering services, so on and so forth. Finally, you see here in the note, I have shown you mostly the term economy deals with production of goods and services. Economy means we concern with the production of goods and services and pricing them. How much price? How much real for each product? So we have to price them effectively. How? By using the resources effectively. Okay, this we are doing for the benefit of national. So in short, economy means to use the available scarce resource more effectively for the national development. So all these things we learned in the last lecture. I don't want to waste the time on this. And one more thing you please keep in mind, the economy is concerned with effective utilization of resources. Okay, in resources we have so many types of resources. Men is a resource, material is a resource, money is a resource, method is a resource. So among all these resources, money is very important because it affects. If any one thing is affected, it will affect the money. If material is affected, it affects the cost. If men is affected, I mean the number of labors. If men is affected, again that affects the cost. So cost is predominant when you compare to all other resources. Cost is dominating all other resources. Okay, so that is why we concentrate more on the cost as far as economy is concerned. So now we focus on the cost. Fine. So this is the slide I'm supposed to start in this lecture. You see the cost classifications. First of all, I'll just tell you what is cost. Can you tell me what is cost? Fine. I'll just tell you the cost is an expense. What is cost? Cost is an expense. So I'll just show here. Cost is an expense. Okay. It is also called as cash outflow. Cost is called as an expense, or it is also called as cash outflow. Can you see here? I just give you in different color, in red color. You can see what I'm typing down. Okay. You see that this is the cost. Cost is an expense. Cost can also be called as cash outflow. Cash outflow means some money flowing out of us. That is called outflow of cash. This is also called as expense. It can also be called as expenditure. All these are different terms. So we put together and call it as cost. Okay. Now, if you take a manufacturing company, or an industry, say for example Al Jazeera or Pepsi. Okay, take it as Pepsi. Pepsi is producing a drink, soft drink, and say for example Pepsi tin. Pepsi tin may be costing, Pepsi tin is a product. It may cost 2 real. So this is called, we call it as a cost of the product. Any company may produce any type of products, but each product will have its own total cost. Total cost means money spent to produce that particular product. That is called as total cost. You see here up the total cost of a product. So the total cost of a product is classified as below. You see, the total cost consists of 2 major cost classification. The first one is fixed cost and the second one is variable cost. Understand? Now the summation of fixed cost and variable cost is called as total cost. That is nothing but total cost is equal to fixed cost plus variable cost. You should keep this in mind. This is a law. We are going to use this to solve problems, to solve numericals. Are you understanding this? Are you understanding? Can I? Yeah, okay, good. So you please keep in mind total cost is the summation of fixed cost and variable cost. Okay. Now the point is you should understand what is fixed cost of a product. What is variable cost of a product? Okay. Before finding what is fixed cost of a product and variable cost of a product, let's understand first of all what is fixed cost. Okay. What is fixed cost? Okay. Let's see the next slide. Fine. See here, fixed cost. Can you any one of you tell me what is fixed cost? Fixed cost. See, from the name we can understand fixed. Fixed means no change. What is fixed? Fixed means no change. It is constant. There is no change in the cost. That is called as fixed cost. Understand? No change with respect to what? So you can see in the definition. Say for example, Pepsi is producing 1,000 tin, 300 milliliter of tin per day. If Pepsi is changing, if it is increasing its production from 1,000 to 1,100, so 100 tin is increased from 1,000. So they are going to produce 1,100 tins in the same day. So when even though there is a change in production, even though there is a change in output, instead of 1,000, if they produce 1,100, the fixed cost remains same. It will not change, even though the output of the product is changing. Okay, the output may increase, the output may decrease. So irrespective of the output level of a product, the cost remains same. It doesn't matter whether you increase the output or you decrease the output of a product, the fixed cost will remain same. Example. So now you should know. Okay, you understood what is fixed cost. Fixed cost is a cost which will not be affected. It will not get changed when there is a change in output level or when there is a change in activity level. Okay. So what are the costs associated with the fixed cost? Example, land cost. Say the land area, if it is 1 acre, okay, it is same 1 acre. Land cost will not change. Building cost, the building of Pepsi company will not change. So the cost is not changing. Cost of the building is not changing. Machine cost, the Pepsi is not adding new machine to produce 100 unit more. So there is no extra cost for machine. So you see the land cost is not changing when the output is changing. Okay, the building cost is also not changing when the output is changing. And the machine cost is also not changing when the output is changing. Similarly, insurance also not changing when the output is changing. So these are all the cost which is fixed even though there is a change in output. So the change in output is not affecting fixed cost. Those kind of cost is called as fixed cost. Okay, you see down the graph I have shown you in this green color graph. I have drawn the graph between the output. This is the cost. Y-axis is the cost in dollars, and x-axis is the units. It is a demand. It's also called as units. Unit means number of units, number of output, or demand in the market. So that's what you should produce. Okay, so a number of products I gave in x-axis, and the cost I have shown in y-axis. Now you can see different lines. Now we are talking about fixed cost only, dark green color. Say for example, this is the initial fixed cost. Let me show you on the pin. Okay, yeah, fine. You see, this is the initial point I'm showing you here. Let us take this much cost is invested to make the company. Say for example, it involves the cost of machine, cost of land, cost of building, everything is put together to this much. Say for example, this is some 20 or 200,000. Okay, real. This much is invested here. This is invested for the building, for the machines, and for the land, everything. So you see here units. This is 0 unit, and this increases to n number of units. So from this 0 units, even though whether there is a production or not, there is 200,000 cost. Whether you produce output or you are not producing any product, but the cost is already invested on land, on building, and on the machines and equipments. So this is fixed. Whether you produce 0 or you produce 1,000 or you produce 500,000, any number of output, the fixed cost remains same. That is why you see the line, it is horizontal. It is parallel to x-axis. So this line is called as fixed cost, FC. So fixed cost is not at all changing. It is constant, whether the product is 0 or it is 1,000. Okay. An example of fixed cost, you know, they are buildings, land cost, see land cost, building cost, machine costs, insurance, and taxes, etc. There are so many costs. I will tell you when we solve problems. Okay, now let's see what is variable cost. This is interesting. Variable cost, from the name you can understand it is a cost which varies when there is a change in output level. When there is a change in output, the cost will change. The cost of the product will change. That is called as variable cost. Understand? Example, say for example, from 1,000 units, I want to increase to 1,200 units. Are you getting me? So we are going to increase 200 units. From the planned 1,000 unit, we are supposed to increase 200 units because there is more demand for Pepsi in the month of, during the vacation, in the summer time, because more customers come to Abha and we need more number of Pepsis. So we might have planned for 1,000, for example, and from that 1,000 we are going to increase 200 tins extra. So when I increase this production, some costs are changing. Example, if I want to increase 200 Pepsi tins, means I need more sugar, yes, and I need more water, I need more number of tins, packing material. 200 tins is required extra, sugar is required for 200 tins, and water is required, and syrup is required, and the flavor of Pepsi, it is also required. So these are all the materials required. So raw material is changing. Understand? Raw material. Okay, the cost of raw material is changing when there is an increase in product. The increase in output level, then the cost of raw material also will increase. So to produce 200 extra, we need more laborers. We need more men to work. We cannot maintain with the same 300 men. We have to increase. 300 men will be increased to 310 people. At least 10 laborers we should increase. If we don't have more laborers, increase the labor hours. L-A-B-O-U-R. Labor hours. H-O-U-R-S. Understand? So this will increase the labor hours also. So when you want to increase the product, increase the output level of your product, then it will affect the raw material cost. Also it will affect the labor cost. So like this, some cost it is affecting. So when output is increasing, the variable cost also will increase. Keep this in mind. Variable cost is directly proportional to output. Okay, when output is increasing, variable cost will increase. Keep this in mind. So that is how you can see the graph. Let me change the color for variable cost. I'll take blue color. Okay, you see here the variable cost is starting at this point down. At this point, when there is no production, variable cost is 0. When you are not producing anything, you don't use raw material and you don't use labor hours. So raw material becomes 0, labor also becomes 0 when you don't produce anything. When you start producing, little raw material is used, little labor is used. So this is also increasing. When you increase again variable cost increase. Again increase, again variable cost increase. Can you see the graph? The variable cost line is increasing linearly. It is sloping up. Understand me? Yeah. So when the output is increasing, variable cost also increases. Yeah. When the output is decreasing, variable cost also will decrease. Keep this in mind. They are directly proportional. You got the relation? This is the one. Now, example. What are the example of variable costs? Such as, see here, labor cost, material cost, overhead costs. Overhead costs. You should know what is overhead costs. I will tell you in the next slide. Okay. Now, you see the law. Let me change the color for this law. Let me take some green color here. Okay. Now, you see the law here. The total cost is sum of fixed cost plus variable cost. Total cost is sum of fixed cost and variable. See the graph. This is the fixed cost. Okay, this area, all these things. This fixed cost plus this variable cost. Here, what is fixed cost? 200,000. When there is no production. What is variable cost? 0. So 200,000 plus 0 is 200,000. So this total cost line, this line is starting from here. Understand? Because at this point, no production. So variable cost is 0. Fixed cost is 200,000. So it starts from here. And next 200,000 plus variable cost here. Again 200,000 plus variable cost here. So it keeps going up, 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 parallel to variable cost. You see the total cost line and variable cost line, they are parallel. What is the difference between total cost and variable cost? It is only the fixed cost. Understand? Yeah, that is the law here. Therefore, the total cost is equal to sum of fixed cost plus variable cost. Total cost we write as CT, capital C suffix T. That is total cost equal to fixed cost plus variable cost. This variable cost is total variable cost. It is the total variable cost of the whole period. If it is 1 month production, for 1 month production, what is the variable cost? You might have produced 500 units. So for 500 units, this is the variable cost. So there is another relation. You see the small CV. Don't forget, this is small CV, this is capital CV. What is the difference between capital CV and small CV? Capital CV is the variable cost, total variable cost. Let me change the color. Yeah, you see the capital CV, it is the total variable cost. What is small CV? Small CV is the variable cost of one product. Only one product. Small CV is the variable cost of one product, one product. And this small variable cost of one product is multiplied by the demand, capital D. Capital D is the demand. Demand is the total output. If you multiply with 500, if 500 is your output, you multiply with the 500, you will get total variable cost. This is another law. Don't forget. Fine. So in this slide, we have two laws. We have seen what is fixed cost, what is variable cost, and what is total cost. And we have seen two laws. One is, this is total cost. Total cost equal to fixed cost plus variable cost. And the second one is total variable cost equal to variable cost of one product multiplied by demand. Understand? Can I go to next slide, please? Okay, fine. Thank you. Good. Okay. Now you see there are different costs again. I will tell you, you should know again what are the different types of costs. These are all just for knowledge. You should know for a knowledge. Then only you can solve numericals. Yeah, capital D. I am coming to you. 814. Yeah, capital D. Capital D is demand. Capital D is demand. I will tell you demand is output, or you can call demand is number of products produced. Okay, clear? Okay, fine. Now you see, are you clear with the demand? Okay, good. Now you see, I'll just give you an idea about different types of costs. Students, you should be very clear with these types of costs. Then only you can solve numerical problems. You should know what is direct cost, what is indirect cost, and what is standard cost, what is incremental cost. You see, don't worry, these are all in English. If you want, you just copy it and translate in Google. Okay, you will get in Arabic. It's very easy to find. And I am telling you, I have given you colors. Direct cost is material and labor. These are the major costs of direct costs. Indirect costs, I have given you overhead. So like this, I am helping you to make easy during reading. Okay, let's see. There are different types of. First, let us see what is direct cost. You see, direct cost is one which can be measured and allocated to a specific work activity. Say, for example, you are producing some product in a machine 1. In machine 1, you know how much material you are giving to that machine 1. And you know how many people are working in machine 1. The laborers, mechanics, something like that. So we can measure, oh, there are 2 persons in machine 1. 1 person is 500 real, 2 person is 1000 real. So it is direct cost. Understand me? Yeah. We can measure how much money we are spending on men, and also how much money we are spending on material. You know, I have given a mild steel bar, round bar, mild steel bar I have given to machine 1. I know I have given 5 kilogram of mild steel bar. Mild steel is the raw material name. Okay, so I know 5 kilogram of mild steel is given to machine 1. So I know what is the value of 5 kilogram. It's the cost of material. So the direct costs are the costs which can be measured, which is known to us. Easily we can calculate. Easily we can calculate. In other words, I can tell directly we can calculate. This kind of cost is called direct cost. Example, material cost. Also, labor cost. Okay, fine. Then you see indirect cost. Indirect cost, you see from the name, it is difficult. It is difficult. It says it's difficult. It says it is difficult. Understand me? It is difficult to calculate. Difficult to attribute. Attribute means allocate. Assign. You see, you can also call it as allocate, or you can also call it as assign or put, something like that. So indirect costs are the costs. Indirect costs are the costs which are difficult. For what? To assign or to allocate. Allocate where? To a specific output or to a specific work. If there is some work, say one machine is being worked, one man is working on machine 1. We are giving him labor cost, 500 real. But there are unknowing costs are there. Unknowing costs. Can you tell me what are these unknown costs? We can also call it as hiding costs. Hiding costs. Say for example, the machine is running. Okay, the machine is running continuously for 8 hours and 2 shifts, 16 hours, and all the 5 days a week. So 16 into 5, so many hours the machine is running. So after 2 weeks, the machine has to be maintained. You know, the machine has to be, as you're maintaining the engine of your car, we change the oil of the engine, we change the filters. So these are all called as unseen costs. They are not direct to the product. Min is direct to the product, okay? So it is direct cost. Material is direct to the product, yes, it is direct cost. But oil, grease, maintenance, these are all not direct to the product, but they are related to the product. So these costs are called indirect costs. So this cost also added to the product. When you calculate the total cost of a product, you will calculate what is fixed cost, variable cost. In variable cost, there are direct cost and indirect cost. Okay, so now you know what is direct cost: labor, material, equipments, machines. And what is indirect cost? Indirect cost is nothing but they are the cost which cannot be measured properly, but they are related to the product. Okay, and example, you can give other examples like electricity. We need power to work. The machine has to run with the help of electric power. So you have to pay bill to SECO, so the electric company. So that is also calculated for the product. That is also indirect cost. And say for example, engineers and managers, they will sit in an office which is air conditioned. So an AC plant is running just to produce 1 Pepsi, or just to produce one liter of Algezara paint. The engineers, managers, they are sitting in the AC room. Who will give this money? So this is indirect cost we add to the 1 liter of paint, and we take the money. This is called as indirect cost. Okay, the cost which are not directly associated to the product. Fine. Do you understand what is direct and indirect? Do you understand between direct cost and indirect cost? Yeah? Okay. Good. So now let's go to the next cost. We call it as standard cost. See, again, from the name we can find standard. Standard means it is calculated before production. It is also called as planned cost, because we plan it before producing a product. Okay, that kind of cost is called as standard cost. Standard cost need not be practical, because planning is different, practice is different. Standard cost is just an approximation, that's all. So it will guide us in manufacturing. So standard cost is nothing but, see here, cost per unit of output established in advance of production. In advance of production. This is very important, please. Advance of production. Before producing, advance, you find the cost, you calculate the cost. That is called as standard cost. So that's why this is also called as planned cost. So you should know what is standard cost. Fine. Now let's go to the next. Yeah. Slide is not clear. I'm sorry, I cannot help you. I don't know how to make it clear. Fine. You see, please adjust. You can see your PPT later. Okay. Now the incremental cost is there. Okay. Incremental cost. Incremental means additional cost. What is this additional cost? When you get additional cost, we will get additional cost when I increase my production level by 1 unit. Say, for example, I have planned for 1,000 unit. Now I am adding 1 unit extra. Understand? So my total production will get increased to 1,001 unit. So for this 1 unit additional, it will incur some cost. That cost is called incremental cost, because I am increasing my production by 1 unit. Understand? So for this 1 unit increase in output, how much cost is increased from the planned cost? That cost is called incremental cost. You see here, I have given it the definition. Additional cost. It is an additional cost resulting from increasing output of a system by 1 unit. Only 1 unit. Okay, that's in. So you should I hope you understood what is direct cost, what is indirect cost, what is standard cost, and what is incremental cost. Fine. Now let's see the next costs. These are some 3 costs: the cash costs, book costs, and sunk costs. You see, cash costs. This is a cost that involves the payment of cash. You do transactions by giving cash, direct cash. You're not using your card, credit card, debit card, whatever it is. You're not using book accounts. Directly you're giving cash, reals. This is called cash cost. Book cost. Book cost means you don't give in terms of cash, but you will write an accounting system. Okay? Say for example, some companies, they pay money, they pay the salaries to the employees to the bank account. They don't give the employees cash, but the same cash is given in the form of book. It is written in the accounting system. This is called book cost. Okay, these are just for general informations. Sunk cost. Sunk cost means it is a cost that has occurred in the past. Already it is finished. Sunk means it is gone inside the water, finished. It will not come back for again. Okay, what you want to explain again? About what? Please type me 146. Book cost. Okay, book cost. Say for example, okay, let's take Al Jazeera company. Some of our students, of course, they are working. Some engineers are there. At the end of month, they will get the salary. Al Jazeera company is not giving them cash. Understand? Is not giving them cash for salary. They will credit the money in their bank account. So the engineer will go to the bank at the end of month and he takes his money from the bank. He don't take money from Al Jazeera company. It is same for all companies. Yeah, from the bank. So they don't give cash transaction, but they write it in the book. Book means accounting system. Nowadays we call it as electronic books. That's in computer. Okay, that's the thing. So sunk cost. Good. Sunk cost means it is a cost already happened. Means last. It is a past. It is finished story. Sunk means already it is gone case. Before 1 year, they did some cost transactions, and that cost will not come into this year account. You cannot carry forward any cost of previous year to this year. That kind of cost is called sunk cost. You know, accounting system, every financial year, we call it as financial year. I'll just write it and show you. See, financial year, YEAR, financial year. You see, every company will close its account every year. So the previous year money will not be carried forward to the present year. Never. That cost is called sunk cost. So sunk cost is a cost associated with last year, also called as past year. It is finished. Okay, so now let's see the next slide. Again, opportunity cost. Opportunity cost is some opportunity, a company having an opportunity to do business, but we missed to take the new order. Why? Because we don't have resources, limited resources. I don't have more mission. I'm getting more order, but I'm not able to take all orders because I don't have more missions. I don't have more men. So that is why I missed the opportunity to make more money. So that money is becoming my cost. I lost it. That's why it is called as opportunity cost. And life cycle cost, it is the summation. It is a summation, means addition of all costs related to a product, structure, system, or service during its lifespan. Life cycle cost means it's a cost related to a product, structure of the company, and system, and service during its lifespan. All costs associated with the product is called as life cycle cost, starting from its raw material to the finished product. That is called life cycle cost. Okay. Now let's see. This is very important. You should understand what is the price of a product. Okay, you should know what is price of a product. Say for example, you want to purchase a laptop. You're going to Zarir bookshop. Fine, and you're selecting some laptop. You ask him how much is it. Some people, they do not know. They will ask how much is the cost. Cost means only money associated with making the product. That's all. Cost means this. Cost is nothing but money associated with making the product. How much is the cost means he will tell, okay, cost is 2000 real for the laptop. But do you think he will sell for 2000 real? He will not sell for 2000 real because, say for example, this is a Dell laptop. The Dell company needs a profit. The Dell company needs a profit. So he will keep some 400 real profit for him. 2000 is only making money. Money is spent for making laptop. But the man needs profit. He wants money to enjoy for him. He put his efforts, he put men, he put material, he put machine, he put time, everything, and he make a laptop. And that cost 2000, but where is his profit? So he will add some money, 400, 500, 200, 300 as a profit. And he will sell the laptop for 2400. This is called price. Understand me? Yeah. So keep in mind, price is always greater than cost. Don't forget. Price is always greater than cost. So when you go to Zarir bookshop, you should ask him what is the price of laptop. You should not ask him what is the cost of laptop. Okay, even though you ask cost, he will tell you the price only. Okay, because he needs profit there. So now this is the another law, law number 3. In this lecture you have third law. Law number 3 is about price relation. Price of a product is sum of total cost of the product plus profit. Okay, how much is the profit? How much is the profit? It depends on the company policy. The company can fix profit based on some rules and regulations. Normally, profit is given in terms of percentage of total. TC is total cost. TC, total cost. Before I write CT, total cost. This is also total cost. TC also total cost. Understand? Okay. You can write either CT, total cost, or TC, total cost. Yeah. So the profit always you can write in terms of percentage of total cost. Profit can be equal to 2% of total cost. Example, I'm giving you example as 2%. Okay, but it need not be 2%. It depends. It may be 2%, it may be 5%. It depends on the company, as I told you. Okay, so only thing, don't forget the law. The law is price equal to total cost plus profit. Understand? This you keep in mind. So the first law is total cost equal to fixed cost plus variable cost. Second law is total variable cost equal to variable cost of one product multiplied by demand. Third law is profit equal to total cost, price equal to total cost plus profit. These three you should keep in mind. Okay. Now there is one relation between, this is interesting by the way. I'll take you back to first slide. The relation between price and demand. The relation between price and demand. Okay, let me show you here. Okay, the relation between price and demand. I will increase the size of font. How the price and demand is related. What happens to the price? What happens to the price? Okay. What happens to price when what happens to price when demand is decreasing? Say for example, demand is decreasing. We have less demand for your product. I'll tell you how to find a profit. Wait. First you see the difference between price and demand. You see, the demand, when there is a very less demand for your product, we need more profit. Okay, price will be same, but we have to increase the profit, more profit. Okay, so the price will increase. When demand is less, price will increase. At the same time, when change the color again. At the same time, when the demand is increasing, that means you have more demand for your product, then we can keep less profit margin, so your price will decrease. This is the relation, please don't forget. When price, say for example, the Chinese company, understand me, Chinese people, they give for very less price. How they give for, inverse, very good. How they give for less price? Chinese product is always cheap. Why? Because they produce more products and sell everywhere in the world. Chinese car, Geely. The Geely car is very, very cheap. 23,000, 25,000 Saudi Riyal, you will get a new car. It is Chinese. He gives very less profit margin. Yeah, he keeps very less profit margin. Why he keep less profit margin? Because he sells more number of 1,000 cars of Geely. He will sell it throughout the world. But if you see American cars, GMCs, you will see in very few countries. Only in America, only in Saudi Arabia, only in Dubai, somewhere very rich countries, they will have few countries. So less cars are sold in GMC. That is why they keep more profit margin. Profit is more, so price will increase. Understand me? So when demand is decreasing, price will increase. When demand is increasing, price will decrease. This is inversely proportional. Price, small p, is inversely proportional to demand. Okay? So quality doesn't matter. We are not talking about quality. Quality, when you go for quality, definitely price will increase. Because quality always costs. Quality, always it will cost. If we are trying for a good quality product, definitely the price of the product will be huge. No compromise for cost if you see quality. Keep this in mind. Yeah, good. So I'll just take you back to our slide. One boy was asking me how to calculate profit. Yeah, this is we are in this slide. So if you are asked to find the profit, we will give you the data for the price and total cost. You will use the same law and find the profit. You will be given with price, you will be given with total cost. That is a simple logical questions I will give, because this is just an introduction chapter. It will be fundamental problems. Don't worry, okay? So profit, if you are asking profit, means you will get these two values. You will know what is price, what is total cost. And directly you can find from this relation. Profit will be equal to what? Profit equal to price minus total cost. That's all. Okay, use this formula and find it. Okay. Now let's see the next slide. You see the relation, what I told you, the relation between price and demand. They are inversely proportional. This is the graph. Okay, you see this is the units in demand. This is 0 unit. And here some n number of products is produced. So it is increasing output. See, this is the price. It is increasing. So when there is no less demand, the price is more. I told you when the demand is very less, price will be more because of more profit margin. And when the demand is increasing again, you see the price starts decreasing down. Okay, here this is the point where Chinese people works. They produce more and sell for less price because they fix less profit margin. Okay, so this is one important thing. If I ask you what is the relation between price and demand, you should know how to tell. Price is always inversely proportional to demand. If demand increase, price decrease. If demand decrease, price increase. Like this you should tell, right? Fine. Okay, let me take you to the next slide. You see, this is the last slide for today. Again, as I already explained you, I have told you what is fixed cost in the previous slide. Fixed cost remains constant. Okay, you know this. And I told you what is variable cost. Variable cost, when there is zero production, variable cost is zero. When the production increases, variable cost keeps increasing linearly. It's a linear increase, VC. See, this is called variable cost. Okay, or sometimes you can write variable cost VC also. This also can be written as like this. This is total cost. Already I have told you this. Total cost is parallel to variable cost. You can write CT or TC, total cost. Similarly, fixed cost, you can write CF or FC, different books, they will write in different style, fixed cost. Okay. Now, you see, the main thing in this graph is to concentrate on the curve, revenue curves. Revenue, you see, this is called revenue graph. Yeah, this is the last one. We'll finish it now. Fine, this is revenue. Revenue means income. You should understand what is revenue. Revenue means income. It is also called as cash inflow. Cash inflow. This is called revenue. Cost means cash outflow. Revenue means cash inflow. Okay, it is a profit for us. Income, cash is coming to us. Okay. Now you see this graph. Please concentrate on this graph. You see, it starts from here. It goes up, up, up. Again, this is the revenue graph. Again, it is coming down, 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 down. Fine. Now you see, this graph is showing demand in x-axis, cost or revenue in y-axis. Keep this in mind. Now let's concentrate on because you know fixed cost, you know variable cost, you know total cost. Now I will tell you about total revenue. Total revenue. You see, initially the revenue, when you start production, slowly it starts making some cost. Again, it increases. It goes up, 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 up. So at particular point, at this point, it is crossing total cost. So you see, till D1 dash, from this point to D1 dash, do we have profit? Can anyone tell me, from 0 to demand 1 dash, do we have profit? We cannot have profit because this is the revenue. It is still below total cost. This is the cost. Say if cost is 2000 real, our revenue is also 2000. So revenue income is 2000, cost is 2000. So there is no profit, messy profit. Above anything above this point, okay. Say for example, if demand is here, at this point you can check there up. The point is here. So this is 2200. So what is the difference between 2200 and 2200 real? So this 200 real is profit. So from this point it is again profit. All are profit. Okay. And at this point you see, when it reaches D-2, D2 dash. After this point again it is coming. It is falling down. The graph is falling down. So it is coming down to loss region. This is loss region. This region is loss region. Okay, why it is loss? Because the same machine is used. So the machine becomes very old when it is used more. Just like you sell your car after 3 years. After 4 years, people will sell their car because it is used more. And then car will give more maintenance problems. You have to change the engine, you have to change the gearbox, everything. So that is why it is in loss region. So initially there is a loss region. Keep this in mind. After a lot of usage, again there is a loss region. There is a profit region in between. This is the profit region. This you should keep in mind. Okay. Initially, why there is loss region? Because we invest 500,000 real, we have to get the money back. So there is a loss region. Once after getting money back, everything is profit for us. After a couple of years, after 5 years or 10 years, again we will go inside loss region because the machine is becoming old. So you should not produce. Either you replace your machine or you maintain your machine. Purchase the new machine. Understand? So this is all about the cost curves. As engineers, or as managers, you should know the optimum point, how much to produce. So between D1 dash and D2 dash, this area, if you make production, if you make the demand around this, it is safe for your company. If you produce here, it is loss. If you produce here, it is loss. Okay, you should understand for this. Okay, so now you see we have last one simple problem. I will finish with this. Only 2 minutes I will take from you. You see this problem. If the total variable cost, I'll change the color of this. If the total variable cost of the product is 500,000 real, so given data, total variable cost 500, I write. Then total fixed cost is 150,000 real. Total fixed cost 150,000. This is given. This is given. Then the total cost of the product will be, what is the total cost? 4 options. So you know the formula, total cost equal to fixed cost plus variable cost. Okay, so fixed cost is given 150,000 real and the variable cost is given. Just add, you get 200,000 real. So the correct answer is A. So like this you will have to practice problems. We will see a couple of other problems in the next class, in the next lecture. Okay. With this we will finish today's class, and I thank you all, and the next lecture we will see. Some students were asking me, yeah, it's possible you can also discuss with me in office hours. Okay, office hours. My office number is I think 32. I think 32. Yeah, 32. Or you see your announcement. See your announcement. You will get my office. Sure, I will respond to your messages and course mails. Don't worry. Okay, so thank you to all. And good night. Yeah, thank you.